Okay, I'm going to explain question 1 of prepayment accruals revision. Okay, so remember that for prepayment accruals, there are actually 3 steps. Okay, so step 1, we have to record the cash and check paid or received. Okay, step 2, we record for adjust for the para, okay, your prepaid accruals, okay, your receivables and income received in advance. Okay, and last step, because this is a income or expense account, we transfer to profit and loss. Okay, so these are the 3 steps. Okay, so question says, before we look at all the things, right, we should look at the question. Okay, prepare the following accounts for the year ended 31st May 2018. So this is actually my financial year end. Okay, it's very important to know your financial year end. Okay, so let's look at the information given for step 1. Okay, so we are going to prepare our utilities expense first. Okay, so step 1, they said bank extract for the year ended 31st May 2018. Okay, so bank extract relates to cash at bank. Okay, I pay $3,600 for utilities. Okay, so when business makes payment for expenses, utilities goes up. Okay, my expenses go up. Okay, cash at bank goes down. Okay, decrease my assets. Okay, second step. Included in the utilities payment, okay, so included in this amount was the sum of $2,400 for the 3 months from April to June. Okay, April to June is actually 3 months. So if I draw the timeline, my year ends on 31st May. Alright, so if my year ends on 31st May, the start of the year will be 1st June 2017. Okay, and this $2,400 was for 3 months from 1st April. So I'm drawing from 1st April all the way to June because the question says to June, right? So from April to June is 3 months. I am paying $2,400 for this period. Okay, but because my year end is on May, okay, 31st May. So for this $2,400, not the entire sum is not incurred for that year itself. Part of it is actually incurred for the next year, okay, which I shaded in red color. So this amount that is incurred for next financial year is my prepaid utilities. Okay, and how do I calculate? It's actually $2,400 divided by 3. Okay, because it's actually only for 1 month, the period of June. Okay, so when there's prepaid utilities, I know that this is incurred for the next financial year. Okay, it's not for this year, it's for the next financial year. So what do I need to do? I need to reduce my expenses. So I will credit expense. Okay, because this expense is not incurred for this year, it's actually for next financial year. So I should reduce the expenses. Okay, and debit prepaid utilities. Okay, so this is step 2. Okay, step 3, I transfer to profit and loss. So how do I adjust it? Okay, let's look at my answers. Okay, so first, okay, I'll refer to my journal entries. Okay, my step 1 says that I debit expense. So debit expenses, $3,600. Okay, opposite account, cash at bank. Okay, opposite account, cash at bank. Okay, next step. Because there's an amount that's incurred for the next financial year, I credit expense. This amount that is prepaid is $800, right? So credit expense, okay, credit the expenses, $800. Opposite account, prepaid utilities. Okay, and I'll get $2,800 now. Okay, so this amount transferred to profit and loss, I need to make the final amount 0. Okay, because for expenses and income, I always transfer to profit and loss. Okay, the other thing to take note, all these transactions always happen on the last day of the financial year. Okay, now let me explain part 2. Prepare the following ledger account for commission income. Okay, so step 1, same thing. I received $2,800, okay, for commission income. So my income actually goes up. Okay, cash at bank also goes up because I receive an income. So asset goes up. Okay, step 2, adjust for my para. So they say that commission income was agreed to be $2,200 per year. Okay, so this $2,200 is actually the annual income earned. Okay, for the entire year, I'm supposed to earn $2,200. If I draw my timeline, okay, my year ends on 31st May, right? So I draw 31st May and 1st June 2017 is the start. I am only supposed to earn $2,200 for the entire year. Okay, look at my value here. But take note, okay, the business actually received $2,800 from here. Okay, hence what happens here? I am supposed to earn $2,200, but I actually receive more than what I'm supposed to earn, which is 2008. Okay, so this amount, the extra amount that I received, is actually my income received in advance. This is for the next financial period. Okay, this extra amount, okay, which is if I calculate right, it's actually $600, right? Okay, 2008 minus $2,200. This $600 is actually earned for the next financial period. So what do I need to do? Because it's earned for the next financial period, I need to decrease my income because it's not meant for this year, right? It's not meant for this financial year. It's not meant to be earned in this financial year. Credit, income received in advance. Okay, this is a liability. Okay, so step 3, transfer to profit and loss. Okay, let's look at our answers now. So first step. Okay, we credit commission income. Okay, so credit commission income, $2,800. Okay, opposite account, cash at bank. This is step 1. Okay, step 2. Okay, step 2. I have to decrease part of the income earned because this entire amount is not meant for this financial year. Okay, part of it, $600, is for the next financial year. So I decrease income, so debit income, $600. Okay, and opposite account, commission income, received in advance. Okay, lastly, transfer everything to profit and loss. My final balance should be a 0. Take note, this happens on the last day of the year. Okay, adjustments and my transfer to profit and loss happens on the last day. Okay, for part B, they say prepare an extract of the balance sheet as at 31st May. Okay, showing all the relevant sections based on the information above. So what do they want you to do is that on the last day of the year, which is all your adjustments, right, after you have adjusted everything, they want you to show the accounts in the balance sheet, okay, which is actually my assets and liabilities, okay, or equity. Okay, so if you look at here, I actually have a prepaid utilities. Okay, this is my asset, right? Okay, and my income received in advance on the last day of the year, I actually have this is a liability. Okay, so in my balance sheet, I will actually have these two accounts, commission income received in advance, okay, and prepaid utilities. You got to be specific.